Does progressive tax apply to all taxable state income? Imagine a system where the more money you make, the higher percentage of it you pay in taxes. That's what a progressive tax system aims to do. But does this kind of tax apply to every dollar you earn from your state? Not exactly. It really depends on the state's laws and policies. Most states that have an income tax use progressive rates for individual income. This means if you earn more, you pay a higher rate on the additional income. For wages, salaries, and other earned income, the tax brackets are set up so that income within certain ranges is taxed at increasing rates. This reflects the idea that those with higher incomes should contribute more. However, not all types of taxable income are always taxed progressively. Some states have flat tax rates on certain income sources like capital gains or dividends. For example, a state might tax capital gains at a single rate regardless of how much you earn from them. Some states also do not have an income tax at all and instead relying on sales taxes or excise taxes, which are often considered regressive. In addition, states often include deductions, exemptions, and credits that can lower the amount of income subject to the higher rates. This can make the actual tax paid less than the raw rates suggest. So, even if a state has a progressive income tax system, the final tax burden can vary widely depending on individual circumstances. The goal of progressive taxation in state policies is to make the tax system fairer by asking those who earn more to pay a larger share. States choose whether to apply progressive rates to all taxable income or only certain parts based on their fiscal goals. Some states want to reduce income inequality, so they use more progressive systems. Others prefer simpler or less progressive structures for easier administration or economic reasons. In the end, whether all taxable state income is taxed progressively depends on the specific laws of each state. Most states do apply progressive rates to the majority of earned income, but certain types of income may be taxed differently or not at all. It's always a good idea to check the specific tax laws of your state to see how different income sources are taxed.